Hello and welcome to the weekly wrap video. A couple of things to catch you up on from the past 5 trading sessions. Start off with the ECB on Thursday. Some outside chances that the ECB could have cut rates were disappointed as the European Central Bank kept all 3 major rates on hold, with the press conference being very disappointing for the doves. ECB's Draghi did not provide any further clues of any potential easing in the near future. However, he did say that at the survey of professional forecasters, which we receive next week, if they have more clarity and more of a breakdown of that medium-term inflation outlook, those tools do still remain on the table. So that does not put analysts off forecasting a cut at the March meeting at the ECB. So we did see some euro strength off the back of that rate decision, which has persisted through in towards Friday's close, with euro dollar really up at that 136 handle on the back of a less than dovish press conference from the ECB president. So moving swiftly on to the US side of things, we saw non-farm payrolls just today disappointing expectations with a reading of just 113,000, so well below the 180,000 forecast, and that dismal December reading revised higher by just 1,000 to 75k. Did see a lot of volatility in the US asset classes post that number itself. However, the Wall Street session for Friday is actually in the green, so some good points to note of that jobs report. The participation rate recovered from a 35-year low, rising to 63.0% from 62.8%, and that was coupled with a fall in the unemployment rate to 6.6% to multi-year lows. One more thing worth noting then, we did see the German Constitutional Court just this morning saying they see some substantial evidence that the ECB's OMT, that's the Outright Monetary Transactions Programme, could exceed the ECB's mandate. As such, they've actually referred this to the European Court of Justice, who are unlikely to give it a very hard time as they give that passage through the European Parliament. So a quick look ahead to the risk events next week then. We have the Bank of England's quarterly inflation report, likely one of the key risk events next week, as Carney is expected to unveil a revision of forward guidance. Some saying he could drop the unemployment rate threshold to 6.5%, others saying he could adopt some sort of wage growth threshold, and if that is reached, that is the point at which the MPC will then adjust policy. We also have Janet Yellen appearing in front of Congress in the Humphrey Hawkins testimony, where she's expected to be grilled on the QE3 programme, as they've conducted now 2 consecutive tapers, so we'll look to see just how she fares in front of those US lawmakers. She's likely to maintain that low rates for an extended period of time are the right course to follow for the US economy. And then of course we have the ECB survey of professional forecasters. This is going to include 2016 for the first time, and it is one of the first professional forecaster surveys of the year, so we'll get to see some further clarity on just where the ECB see the Eurozone economy steering as we progress through the next 24 months. In the meantime though, that's all from me. I hope you have had a great 5 days of trade, and I hope you have an even better weekend, but I'll see you again on Monday to get yourself prepped up for those 5 days.